Have you been thinking about diversifying your property portfolio, but unsure how or where to invest next? SJR Property Group is a buyer's agency based in Perth, specialising in helping East Coast investors diversify their portfolios. We focus on helping our clients achieve their financial goals by investing in high-quality, high-cash-flow investment properties that are poised for long-term capital growth. If you've been thinking of investing in the WA market, the team at SJR have feet on the ground and are here to help. Visit sjrpropertygroup.com.au or call us today on 1300 757 774 to chat with an expert.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, good day everyone. How you going? Phil Tarrant here. I'm the host of the Smart Property Investors. I hope you're well. Bit of an international flavour for today's podcast. We have a guest tuning in, dialing in all the way from usually sunny Dubai, which is the epicenter of a lot of stuff in the Middle East. Really in this section of East meets West, and great economic activity there that attracts a lot of Australians coming into it. So he's dialing in marvels of the internet. Before we used to do this all in the studio, now we're all over the world. We're global. Tim Biason, property investor extraordinaire. Tim, how you going? You well?
Good, thanks, Phil. Happy to be on the show. Really pumped.
Mate, thanks for coming on. Thanks for sending a note to the team. We often forget that, we normally speak to property investors in Australia, but I'm very conscious that there is a sort of cadre of Aussie expats all over the world, whether they're in London, the US, in Asia, and also Dubai, tuning into the show and still making investment decisions, growing their wealth in Australia, irrespective of the fact that they are working somewhere else. I want to have a chat about how you do that today as a global citizen, Tim, not an Aussie domicile, probably for tax purposes. We could have a chat about that as well, no doubt. But you're a property investor, Tim, but you live in Dubai, but you invest in Australian real estate.
Yeah, correct, Phil. Actually, I've been a property investor whilst I was living in Australia. So I kind of tried to continue my journey as a property investor when I moved away from Australia about 8 years ago. But really, I started my journey as an Australian resident investing in property back when I started my career around 2010, 2011 stage.
Well, okay. So you've been investing for well over a decade, and you still look pretty young. So you got going pretty quickly, did you? As soon as you started earning a paycheck, you started investing in property?
Yeah, I finished university a year off where I didn't really have a job, so to speak. I was doing some training for some flying, and it was 2010, and I got a job with the airlines in Virgin Australia back in Brisbane. And a couple of years into the job, I was thinking of ways to make money outside of my normal day-to-day job. There was two reasons. One was that I was heavily in debt, and the other was that I couldn't see myself saving too much from a day-to-day paycheck.
Yeah. So you work in aviation flight operations. Does that mean you're in the cockpit?
No, actually more sort of back support. So yeah. My first job as a flight ops engineer was really to support the pilots with some calculations, some tools, some things to do with the standard operating procedures and help them manage the plane. Because as you can imagine, the pilot rocks up to work. He gets a lot of information handed to him, and a lot of things need to be done before he starts his flight. So as flight ops engineers, we would do a lot of those type of work, like things like aircraft performance, weight and balance, etc.
Yeah, okay. So you do all the important work, and then the rock stars just show up and drive it, right?
Yeah, something like that.
and Dubai being where you live now, a hub for aviation, but your work has taken you all over the world, has it?
Yeah. So I left Australia for work in 2015. I went to Qatar actually to work with one of the airlines over there. So you can imagine which one it was. Then I went to Hong Kong for a couple of years, and now in Dubai for the last 3.5 years.
Sounds very glamorous.
I mean, I can't complain. It's a nice life. I mean, in terms of like personal development and getting to meet different types of people and meeting different people from all walks of life, it's really been a blessing, really, to have this type of career. Yeah.
And what did you study at university?
I did aeronautical engineering.
Okay. The University of New South Wales?
Sydney, University of Sydney.
Okay, yeah. They're much better schools, Sydney.
Yeah, of
aeronautical
course.
engineering. And then why is that? Were you just sort of big on maths and physics and stuff at school?
No, not really, actually. I kind of had like I was more into business and economics. And when I finished high school, that was the stream I was going to go to. And I actually started working in tax for 1 year. Then I realized this was kind of not for me. And I kind of looked back and tried to see what I wanted to be as a kid. And I think, looked back in some old year 6 books and stuff. And I said I wanted to be a pilot. So I set about going down that course, but I wanted a degree at the same time. So I did aeronautical engineering whilst trying to train to become a pilot. But I was not really a very good pilot. I mean, the thing with piloting is that you have to spend a lot of money to kind of get to that position where you fly for an airline. And my path kind of went in a different way.
But so you got your private pilot's license. Did you get sort of commercial endorsements or anything like that? How far did you get through on your actual flying career?
I got my commercial pilot license with an instrument rating. I don't know if you know what that is.
Yeah.
But yeah, I got to about 250 hours of flying.
Okay.
Yeah, but that was at the same time as working and studying. So yeah, and I was kind of, trying to fund all of that flying by myself through various jobs and loans and that type of thing. So
yeah, it's expensive business. And did you have a big HEX debt at the time as well, I would imagine?
Yeah. So I had a lot of flying debt and I had a lot of HEX debt. And hence the reason I was trying to figure out how I was going to get out of debt and how I was going to, get some savings, basically.
Yeah. And if you don't mind sharing, how much sort of HEX and flying debt did you have before you started investing in property?
It was around 80,000.
Okay. It's a big chunk of unsecured debt. I guess you've got some skills and probably a nice pastime, but do you still fly today? Are you still flying recreationally?
Unfortunately, I didn't manage to keep it up just because overseas there's not much of a domestic aviation scene. Like, I mean, for example, Qatar, your domestic flights is non-existent. Yeah. Hong Kong, domestic flights, non-existent. Even in Dubai, not really. You wouldn't do the good thing about flying in Australia is that you can go from one state to the other and you have a bit of an adventure and, go to these like remote airstrips and that type of thing. And then you have a bit of fun, but overseas it's a bit smaller.
it's very different. It's very, very different. Yeah. So 80 grand in educational debt. Do you think are you happy about the flying? All the money that you spent on your flying as potentially a career, but sort of what become a pastime. Is you happy with the investment that you made there?
Look, I think it helped me get my first job in the aviation industry.
There you go.
And I love the aviation industry. It's super exciting and I'm having a lot of fun right now. So I think I try to look at it that it propelled me into an amazing career. So it probably cost more than the average guy, but it was my my pathway. And
it's giving you a start, right? And it's also allowed you sort of probably change your thought and your process and your paradigm around, how you can use property as a mechanism for creating wealth, and whether that's sort of initially paying back some educational debt and then sort of propelling from it. I do note also we're recording this midday in Australia, so it must be pretty early in Dubai. But so you don't get to work from home in the job that you do, right? It means you go into the office every day and do stuff.
We can work from home, but my job is a traveling job. So I would probably travel maybe 1 week per month. So I get a bit of variety in there.
And where would you travel to? Just as part of the job, you go to different airports to work on different things?
So we travel to meet airlines. So from Dubai, we cover the Africa, Middle East, and South Asia region. So I traveled to India, I traveled around the Middle East, and I traveled to places in Africa like Rwanda, Uganda, Ethiopia, that type of thing.
So you pretty well travel. You see a lot. You've been in a lot of countries, no doubt.
Yeah, I've been a few countries. Yeah. That's
and do they always sort of put you up the front of the plane? Are they fly you nicely, or they chuck you in the back in the cramped seats?
We fly nice. Yeah. We fly nice.
Well, what's your favorite country to visit? I know it's not to do with property investment. I'm just really curious, seeing that we'll travel through Africa and the Middle East and Asia. Any place in particular you really like to go to?
I'm going to say, because I've been away so long, I'm going to say Australia.
Fair enough. You still call Australia home. And so you're Aussie born and bred. I know you've got a Filipino background. What's the backstory there, coming from a Filipino family? Are they big in property investment, Filipinos?
So I'm not born and bred. I came when I was about 4 years old to Australia with my parents. So I grew up in Blacktown, Sydney. Phil, shout out to
huge Filipino community in Blacktown. I don't know. I got a question sometimes, Filipino community choosing Blacktown to be a place to build their community out because, a lot of people know I grew up out there. I probably would have chosen somewhere else, but it's a great place, Blacktown. Love it.
Yeah. Well, I'm not sure. I think just few people were there and then probably more and more people heard about it and it just became the community. And I think there was a lot of immigration from the Filipino community, 80s, 90s, that type of thing. So, what was the question? It was
just like the Filipino sort of culture towards because I'll probably go to Manila 4 or 5 times a year, so I have a sort of good affinity with the Filipino community. We have offices out there, so I really enjoy getting out there and spending time with our Filipino colleagues. It's a good, wholesome, family-orientated community, and no doubt sort of is very much emulated here in Australia and the communities here, but big on property investing?
So I would say that if the Filipinos were thinking about building wealth or, making money, they would think about property. They would be more skewed to think about property. I don't think they're as business oriented as the Chinese, let's say, just living in Hong Kong. They're more about business and property, but Filipinos would be more about just the property side of thing, not so much the business, I would say. Yeah, but it's my property journey kind of started with my parents, them instilling their idea that property was a good investment vehicle to build wealth, basically. So I would say, they have something there, but it's not as strong as maybe some other cultures.
Yeah, it's my sort of observations of Filipino culture. They absolutely prioritize the family unit, the immediate family unit, the generational family unit, and the wider sort of family unit. It's absolutely critical, and in many ways why Filipinos, particularly Filipinos in Australia, western suburbs of Sydney, have been hugely successful. It's good to see that community sort of grow and emerge and sort of, intersect with all parts of the Australian culture. It's great, and Filipino food's pretty good as well. So any chance I get to have that, I always get stuck into it. But, it's I always find intriguing how sort of cultural backgrounds often dictate or determine attitudes towards money and wealth creation. And in some cultures, sort of chatting about wealth creation is like, it's taboo, you don't do it. Whereas in other sort of cultural orientation, it's what you do, right? It's all about how you go about sort of making more money, which I find really intriguing. But I want to chat about your property journey, Tim. We'll just go to a quick break. Stay with us, everyone. Back in a moment.
Are you feeling the strain of high mortgage repayments? Refinancing with Finny Mortgages can help you save big on your home loan and ease the burden on your finances. Our team of expert brokers specialises in helping Australian investors find the best possible rates. Refinance with Finny Mortgages today and start saving. Visit finny.com.au or call us now at 028 866 2444 to chat with an expert.
Welcome back. It's Phil Tarrant from Smart Property Investment. Having a chat with Tim Biason, operating Australian property investor, hasn't lived here for many, many years. And do you get to come back very often? Do they sort of sling you a trip home every now and then, say, come and see the family, mate?
Yeah. I mean, in the beginning, I was coming back maybe every 6 months, but obviously COVID came and I didn't go home for a couple of years. And I just recently came home in October last year. Yeah.
How was it?
So I tried to spend some time here. Yeah, it was good. I went for a wedding. It was a good, efficient way to see everybody, all your friends. So it was nice.
So tell me about the point in time, and I want to have a chat about, your sort of choosing property as an asset class, and then what you did subsequent to that. But so you had all this debt from education and sort of learning how to fly with all the sort of commercial endorsements, etc. Did you sort all that out before you started investing in property, or did you start investing in property and use that to sort out that debt? How did it work? What was the sequence?
Nah, so I was in debt, and at that time, my first property I bought was in 2011. And basically, my parents were coming to me and saying, look, you need to start thinking about property because property is a good way to invest. And I didn't have, much of an idea about it. So actually, my parents were the one that found me a property in Blacktown. And they said, hey, have a look at this. Do you think it's worth doing? And I went to the bank, and the bank said that basically they were lending almost at 100% of the loan at that time with my parents' guarantor. So I was looking at it. I would go into a huge debt. I mean, at that time, it was a huge debt, and I already had a huge debt. But for me, it was about knowing and, over the years knowing that property will grow over time, and I could manage the repayments with the rent that was going to happen with the property. So I just went in having the two debts at the same time. And yeah, I didn't even look at the property. I basically trusted my parents with the choice they made. And yeah, and then that was my first forte into the property
Well, it
world.
sounds like you got some smart parents and but maybe persevered with you to sort of get you started, which is good. If you bought a house in Blacktown back in 2011, you probably paid about 300 grand for it, 350 grand. It's probably well worth nearing $1 million right now. Do you still have the property now?
Yeah, I still have the Blacktown property, and I paid 330 for it.
330. There you go. Whereabouts in Blacktown was it?
Place near Richmond Road.
Okay. Yeah, and just a 3-bedroom brick home on probably 600 square meters. Pretty standard stuff.
Yeah, basically. Yeah.
And I bought a lot of property around that sort of western suburbs area at that same time, and now that property would have tripled in value. Have you refinanced it at any point in time, or you still got the original debt on it?
No, I refinanced a couple of times on it because my journey's been trying to get more money refinancing from overseas to try to buy more. So I've tried to refinance a couple of times. I've managed to refinance a couple of times to basically buy some more property.
And when did you refinance the first time to pay off that unsecured debt by way of sort of your HEX debt or the other debt you'd sort of accumulated from flying? When did you get rid of that? How far through?
2015. I got rid of all the previous debt and I refinanced in 2015 as well. Yeah.
Okay. That makes sense. So you bought your first place in Blacktown 2011, 330 grand. It's probably been, has it moved to, even though you've refinanced it, is it still negatively geared or is it positively geared by now?
So actually it was positively geared for the last maybe couple of years. But what we did on the Blacktown, we built a granny flat on it.
Okay.
So we built a granny flat out the back for about 150K. And now it's positively geared. It's positive cash flow as well.
Have you had it valued recently, the property?
Yeah, it's around 1 million.
Yeah. Okay. So you're happy with the investment? It's been good?
Well, this one's the good one. I mean, I have had not so good ones, but this one's the best one. And yeah, I'm happy. I'm happy with this one. This one was the one that kind of built a bit of wealth for me. So yeah, it's been a good one. Yeah,
you got to get your first one right. And buying Blacktown property in 2011, it'd be tough to get it too wrong. Just the uplift that you've had in those areas just through the market has been a huge enabler for a lot of people. I know a lot of people that started their property journey sort of around 2011, 2012, buying those type of assets. I bet you'd tell me that you wish you bought more when you bought that one back then because it'd be a very different portfolio.
Yeah, I mean, I hear that on your podcast all the time and people saying that. But when I think about it, I did the best that I can with the amount of borrowing capacity that I had. So if I could have bought more, I probably would have bought more. But at that time, I think it was it was what I did, but it was, I don't like to look back in hindsight and think, I could have done this, I could have done that. It was the right decision at the right time, I think.
Yeah, absolutely. And you were living in Brisbane at the time, and that must have been, I imagine then you were working for Virgin. Then how did you go about securing debt then? Was it so with your parents as a guarantor, were they happy to lend you the money? No problems?
Yeah, it was no issue. I mean, like I told you, they were the ones kind of pushing for it. And they had a lot of equity in their house, and it's kind of, I don't know, maybe they see it as something, giving back to the kids instead of, something like inheritance. They see that property investing is more of like a better vehicle to having that ability to guarantor something and putting your kids in a better place in the future. I think for them was a no-brainer.
Yeah, it's good. And you got brothers and sisters? They're happy to do it for the other brothers and sisters as well, guarantor the first loan?
Yeah, they're happy to do it. So my older sister, she's on the property ladder, did similar things with my parents. And my younger sister, she's in Germany. Actually, she's married to a German person. And my parents have been trying to get her to buy Australian property for a while, and she hasn't done it yet.
Give it time, no doubt. No, that's right. So you've bought property subsequent to the Blacktown house and the granny flat that you built. So where were you when you built the granny flat?
So I was in Hong Kong when I built the granny flat. And the reason I built the granny flat was because I was trying to refinance and I was trying to buy more property, but I just couldn't get more money from the banks. I don't know if your readers know this, but from my experience, when you're from overseas, they kind of assess your income a little bit harsher than the average Australian. I think they factor in some currency fluctuation. In Hong Kong at that time, the tax was very low. I was paying less than 10%, something like that. And I'm not sure that this was taken into account very well within the Australian banks. So basically, I couldn't really borrow enough to buy another property. So I was looking at other ways to use the cash that I had with me to try to continue the journey. And the only other way I could think of was to build this granny flat. So the granny flat was about 150K. That we had about 60K thereabouts in cash. And I ended up getting a loan for 90K with a local Hong Kong bank, which was basically unsecured. So yeah, it was a decision because I couldn't buy any more property. Yeah, so we decided to build the granny flat.
There's some limitations of being sort of generating your income outside of Australia and trying to still secure debt in Australia from Australian banks. It can be a problem. A really good mortgage broker, by the way, can help you with that sort of stuff. Let's have a chat about some of the other properties you've bought, Tim. Let's go to another break. Back in a moment. Stay with us.
Are you on the lookout for your next investment property? Smart Property Investment and Pure Property Investment have done the research for you on where the hottest up-and-coming suburbs for 2024 are and where you should invest for the best return. The report is completely free to download. Visit smartpropertyinvestment.com.au. Don't make any moves until you've read the report. Take your next step with all the facts, backed by research and industry experts.
Welcome back. Phil Tarrant from Smart Property Investment, chatting with Tim Biasen out of Dubai. He's travelled around the world in his role in flight operations, but has still built out a pretty impressive portfolio. So where did you buy? So we spoke about the Blacktown purchase and the granny flat. What did you buy subsequent to that? Where was the next property?
So I'm gonna claim this one, but it was actually my wife's purchase. She was my girlfriend at the time. So in 2012. Basically, 3 months after I bought the Blacktown property, my wife bought an apartment in Brisbane.
Okay.
So the apartment in Brisbane was in Wavell Heights, and she bought it for about 268K. So yeah, so this one, my wife's parents helped her buy that house. She bought it on her own name. And similar story, they kind of weren't pushing, but they were able to help guarantor the house, and she got the first home buyer's grant. Yeah, so that's the second one. So
did you marry a Filipino girl?
Yeah.
Same. That's cool. So again, sort of parents encouraging, and getting the property. So where did you purchase after that?
So after that, the next purchase. So my wife and I got married in 2015, just before we left to go overseas, and then we purchased in Victoria, in Wavell Heights.
Okay.
No, so not Wavell Heights, Hoppers Crossing in Victoria.
Yep. Or did you buy their house, or it's probably a house?
A house. Yeah, 3-bedroom house. Yeah.
How much you pay?
That one's $422.
Okay. And sort of, you still have it today? You haven't sold anything? You still got the same?
Yeah, I have. I still have it today. Yeah.
Yeah. And so, is it positively geared, negatively geared, pretty neutral? How's it sit?
It's a little bit negative at the moment. Yeah.
Yeah. And I guess so. You would have to lodge an Australian tax return, obviously, as well as a tax return in Dubai. Is that right?
So I do have to log an Australian tax return, but Dubai, there's no tax. So I don't have to lodge anything.
You just receive your income. And so are you Australian domiciled for taxation purposes?
No. I'm a non-resident for tax purposes.
Okay. So that sounds pretty good. So you don't pay tax in Dubai. It's not bad, is it?
No, it's not bad. Yeah, it's very good, actually.
Wow. So how do you get sort of benefits of negative gearing then if you're sort of... You would need to recognise your income, though, in Australia, wouldn't you, for the purpose of the tax return?
Yeah, so every year I lodge a tax return. The last few years I've been getting a negative gearing, so I've been making a tax loss. So those tax loss accumulate. But the last year it was positively geared considering all the properties. So in the tax officer's mind, I was making money. So I had to apply some of those negative tax losses to the last year. So I lost a little bit of there was no benefit. Basically, I lost some of the benefit of the negative gearing.
Yeah. So you can accumulate the losses and then use them at a point in time. And what structure have you bought all these properties in? They all, so the Wavell Heights was in your wife's name. Blacktown was in your name. Yeah. What about the Hoppers Crossing?
Hoppers Crossing was in my name just because I was the one working and I was the one being assessed for the income.
Okay, cool. And is that the end of your property journey? Is there any more that you've secured since?
So that's all in Australia. So this year, again, I was trying to buy in Australia. I had a bit of cash with me, and I wasn't able to get the mortgage again because of the reasons I said before. I was getting assessed quite harshly in terms of my income. So I decided to buy in Dubai, actually. So I'm sitting in a room now. This is our first day in a house that we bought in Dubai.
Your first day in a house in Dubai.
Yeah.
Wow. Is it a house or a villa or apartment?
It's a villa. It's a villa, yeah.
Yeah, it's pretty common. And did you get paid in US dollars or dirhams?
Dirhams.
In dirhams, yeah. And it's sort of, and you would have bought that house. Did you secure debt in order to buy the place in Dubai?
Yeah, I got debt from a local bank here in Dubai. Yeah.
What's the interest rate you're paying on it?
It's 4.99% fixed for 5 years.
4.99% fixed for 5 years. How much did you pay? Well, dirhams aren't going to make much sense to people, but sort of as a conversion in US dollars for the place that you bought?
It's about 1.4 million Australian.
That's a pretty decent purchase, and probably in Dubai to get you something quite nice, but it's not like a sort of penthouse at the Burj Al Arab or somewhere or other, is it?
No.
Yeah.
No. It's pretty crazy, the Dubai market at the moment. I mean, in my suburb at the moment, it ranges from like my type of property to probably 10 million within the same suburb. Yeah. There's a lot of influx of obviously different people coming into Dubai. So a lot of money coming in from the recent world events where people see Dubai as kind of a safe haven. So it's really pushed up the property prices. The reason why we bought really was the rent basically doubled in the area I'm in, and I wanted to stay in this area. So we just kind of thought about it, and basically for security and stability for the family, we decided to buy in Dubai. Yeah. And I think in the end, it will be a good investment because I think the prices will still go up in Dubai. The prices can crash dramatically in Dubai as well. So we take that risk at the moment. But like I said, I try to, with the cash that I have, I try to put it in property, whether in Australia or any other options that's available to me.
Yeah, makes a lot of sense because it's working for you. Was it hard to get a loan in Dubai? Was it as arduous a process as what is in Australia, or is it pretty simple? They're pretty comfortable giving debt to expats in Dubai, aren't they?
Yeah, they're pretty comfortable. The thing with buying property in Dubai, though, is that you really need that 20% deposit cash. Plus, you need to probably think about another 3 to 5% to pay for the fees to the Dubai land department, etc. So for me, obviously, I can't leverage any of the equity that I have from the Australian properties. So you're really going to come up with some cold hard cash in order to buy in Dubai. And then once you do that, they're more than happy to lend to you. Many banks, it's quite easy.
Yeah, and they just take security over the property like they would in Australia.
Yeah, exactly. Yeah, it works the same way.
What's the plan? Are you going to try and sort of pay it off? Or are you going to become a Dubai property investor? And can you do the same there and use the sort of, can you leverage the equity that you build in your property to refinance and buy more property?
Yeah, you can do the same thing here in Dubai. But to be honest, I'm not as comfortable with the risk profile here in Dubai when compared to Australia. So, I was still kind of starting my career when we heard about the crash in 2008 in Dubai, where, being in the aviation industry, you hear about, all the pilots leaving Dubai during that time because of the crash, and have them having properties and that type of thing where they would have had to leave the properties. So I'm just a little bit wary of that. And it's not as stable as the Australian property market, I would say. So the plan would be to have this house as a home for now, and whatever savings and cash I can get to try to maybe expand the Australian property portfolio. I'm thinking maybe to go into the commercial property space after listening to a few of your podcasts, Phil. That might be easier with the way that they assess me, because I think with the lease stock loans, they would just assess the property itself. So yeah, I still want to grow. I still want to continue the journey. It's just that, being in a different, unique situation, I'm trying to think of strategies and ways to do that.
It's tough. And it looks like you're trying to build a asset base and wealth here in Australia, while it sounds as though your job, though, is going to keep you internationally for quite a long time. Can you do your job in Australia, or that just doesn't really exist at the same level?
I can do a job in the industry in Australia doing something similar, I guess. But the thing is that the aviation industry, it's not as big as what you would have with, let's say Europe or the US, where they manufacture planes, manufacture different types of stuff.
Yeah.
So there's more opportunities for me overseas, for sure. Yeah,
it's cool
at this stage.
It means you can sort of, generate income overseas and try and park your money. And in many ways, places like Sydney and Melbourne, Brisbane, Australia in general is pretty much the Dubai of Asia. So, they call it the Dubai effect. I think Bernard Salt, demographer, talks about it, where a lot of wealth in the Middle East, in countries where there is maybe not the same strength and certainty in governments and security situation, people park their money in Dubai. The same applies for Australia, being sort of the same impact on Asia. So it's a good place to build your property. I do know that Sydney got named the best place in the world to live the other day. So
yeah, well, really, that's great.
Pretty cool.
Yeah,
a lot of people are saying it can't be; it's too expensive. But it's cool. Well, thanks for coming on and sharing your story, Tim. I really enjoyed catching up. It's always good to see a Blacktown boy doing good.
Yeah, thanks, man. Thanks a lot.
It's a very glamorous lifestyle you got there, flying around the world.
No, it's I'm just inspired by you, Phil, and your story coming from Blacktown as well. And I thought I'd share mine. Just a simple boy from Blacktown.
Mate, Westies dominate. Westies do it best. That's the way it is.
Yeah,
it's cool. And big shout out to all of our Westie property investor friends out there, sort of grafting, getting stuck in a property. But as I say that in jest, it's property is a great asset class for all Australians to take control of the wealth creation, irrespective of how you choose to do it. And I think you can take it from a story from Tim there. 90% of winning is beginning, and if his parents didn't give him a little kick in the backside to kick him along and help him out in that first investment, and for all those parents out there who have been fortunate enough to have Australian property for many years and have had the impact of a rapid increase, or most recently in equity, have a think about how you can deploy that and help your kids out now, rather than waiting around till you sort of fall off the perch and give them an inheritance. I guess a living inheritance is sometimes very good, and there's many different ways that you can help your kids out getting the property through going guarantor or some sort of equity release products to get them on the property ladder. So go and speak to your mortgage broker about that. Thanks, Tim. We'll catch up, mate. Let me know how you get on when you next buy something in Sydney. Get back in touch and we'll have a chat about it. That's Tim B.A.'s son, doing a good story out there out of Dubai. Remember to check out smartpropertyinvestment.com. You remember also, if you haven't, I don't know if Tim's downloaded it yet, the Fast 50 report, the fastest growing suburbs, where to put your money today for the best capital growth in 2024. You can download it now, smartpropertyinvestment.com. You go and check it out. Remember, social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.